Here we go. Everyone, it's Chad Hallett, Captain Mortgage, here today with Eric George, my favorite commercial lender local here in Fredericksburg, Virginia, and we're ready for another episode of Whiskey, Wisdom, and Real Estate. Eric, how you doing today, brother?
Excellent, Chad. Thank you for that introduction. I'm glad I'm your favorite one. Yeah.
Well, you are someone that I've gotten to know quite well recently through a mutual networking group called the Bourbon Brotherhood, and I have bumped elbows with commercial lenders in the past. Of course, as I explained to you, I do have the ability to broker out some commercial lending. However, I've never considered myself an expert in that field, and I kind of like to stay in my lane. So it was good to sit down with you a month or so ago and grab coffee and kind of learn a little bit more about the business. And that's why I wanted to invite you on the podcast to kind of do so for others. But can you start by telling us who you work for?
Yeah, absolutely. So I work for Link Bank. Link Bank is headquartered in Pennsylvania, actually. But one of the coolest things that I've learned being here is I've been in banking for over 16 years, is we actually take a regional management approach. So all of the decisions down in this Fredericksburg region where I'm located are made here in Fredericksburg. Just me and two doors down, my manager, we make all the decisions down in this area. So that's one of the cooler things about this bank. So headquartered in Pennsylvania, but all decisions for Fredericksburg are being made here in Fredericksburg.
Yeah, we'll definitely want to get into that a little bit further into the podcast because when you say decisions, I guess I didn't really. I knew that the regs were a little fluid, but I didn't know just how fluid until you and I sat down. There's a lot of factors that go into it, and sometimes it seems like it comes down to a judgment call. But tell us a little bit about Link Bank because never heard of them. Then all of a sudden they're all over the place. Is that a new bank, old bank, or what happened with that?
So it's kind of a little bit of all. So what long story, not to get into the whole thing of like how internally banks can grow and stuff like that. But Link Bank was founded in, I believe, 2018, 2019. So roughly about 5 years old now. And they started acquiring some different institutions, on their end. And they're, like I said, headquartered in Pennsylvania, acquired a bank in Delaware, acquired another bank in Maryland, and they were really looking to grow. And they came across Virginia Partners Bank, which was founded and headquartered here in Fredericksburg. And Virginia Partners was founded in 2008, so right at the beginning of the financial crisis. And so they had been a Virginia and somewhat Maryland bank. And they had grown fairly significantly to about just under about $1 billion in assets. And so when Link Bank and Virginia Partners Bank kind of came across each other, Link was actually looking to acquire, Virginia Partners was actually looking to acquire someone themselves as well. And they came across Link, and it just ended up being a good match. So in the industry, it's called merger of peers. So a lot of the same management team came over. There wasn't like a hostile takeover or anything. But Virginia Partners decided to go with the Link name because Link had some of the better technology, some of the newer technology. They were a young company and they were growing really fast. So at the end of the day, I think just over $2.5 billion in assets. So making us a decently sized regional bank.
Nice. Yeah, so no pretty woman moment with the
No,
hostile
no.
takeover, break you up in little pieces.
Yeah, not quite. It's one of those cool things. I joined both. The merger happened back in December, and I joined in February. So I didn't get to go through the merger and everything. But from I've met a lot of people that are like, oh yeah, no, I'm a legacy Virginia Partners Bank person, and I've been through multiple mergers in my 16 years. And the type of people I was coming across going, yeah, normally in a merger, that position is eliminated.
Yeah.
But Virginia Partners Bank and Link, because it was a merger of peers, were able to actually find synergies that in a normal hostile takeover, they're just like, nah, we don't need that person anymore. We don't need that, anymore. So it was very, very well received in the community and then bank internally.
So funny enough, Movement Mortgage was actually founded during the financial crisis too, 2010. And yeah, I take pride in that because that was like the worst time ever to be
Yeah,
the mortgage business. And for whatever reason, our founder Casey Crawford decided that was the time to make a difference and do so. So he founded the company, after getting into the loan origination business himself, and then um, he just saw it as a good tool to not just make money but make a difference in the world.
yeah,
And that's a big part of who we are. As our foundation owns almost 50% of the company. I think 49%, in order for us to secure investors and stuff like that. We have to have 51% the owner, but 49%. So almost 50 cents of every dollar we make goes to our foundation, and
that's
we
awesome.
spend it. We spend it, brother. They just handed out. I can't remember how much money, but $10,000 grants to like 10 different organizations that people
Hmm.
in our region had nominated. Anything from wounded warriors to domestic violence shelters, you name it.
That, that
So it's
that's fantastic.
it's
Well,
awesome.
if you don't mind, I'll actually plug Link Bank's foundation at this point too, because so Link has had a foundation for years, and um, Virginia. So through the merger, the Virginia market just got approved to be part of the foundation. So we are actively looking for Virginia companies, grants. So I guess I've been following the Link Bank up in Pennsylvania, Maryland, and same thing as like $5,000, $10,000 grants to just nonprofits that everyone cares about and everyone loves. So if you're a nonprofit in the Fredericksburg region or broader Virginia region, really, reach out to me, or just go to linkfoundation.eco.com or .org. You'll find it if you're looking for money. You'll find it. But
There
it's brand new. It literally just got approved like 2 weeks ago, and we were just entered into our grant receiving phase, and I think that will go until about end of November, and then we'll start handing money out in December and beginning of the first of the year. So really looking forward to that.
Sure, cool. Well, let's get back to commercial banking. You said that you've been
All
in the
right.
biz for 16 years. What made you want to get into this side of the banking?
Well, it's kind of an interesting thing. I did not know when I got into banking in 2008, January, actually. So it was kind of funny. I was doing it to basically get out of the sun. I was running my own little under the table cash business, landscaping, and I was like, I just can't do this in the sun all the time anymore. And so I started as a part-time teller, and I was like, I'll do this until I find out what I actually want to do. 16 years later, I'm,
Yeah,
I'm still in the career, but no, it's I really enjoyed this career because it is all about the people at the end of the day. And that's really what I like to do. I like to go out, I like to do the networking, like how we met. But realize I like to sit down with people and like find out what it is they're passionate about and how I can actually help them achieve that passion. And so that's really at the end of the day is like there's the art and the science of lending, and the science is all the numbers. Like, do you have the numbers? It's like it's 2 + 2 = 4. It is what it is. But then the art is all right. Well, now how do we get to the goal that you're trying to get to with what the numbers are? And that's where I really enjoyed it because a lot of times for one person, 2 + 2, that answer is 4. And we just look at them and go, we don't want to do business with this person. Like, we just don't like the character. We just don't like the business plan. And we're going to go ahead and part ways. Other people, we're not even getting to that 4 answer. It's just the numbers just aren't there, but we like the story. We like the character of the person that we're with. And so we're going to take a little bit more of a holistic approach and go, well, yeah, the science isn't there yet. But if we kind of work on this art side a little bit more, we're going to be able to make the science side look a lot better.
mm,
And we're going to be able to do a deal because this is someone long term that we actually want to be in business with. Because we're not just lending money. we are getting in business with people, just not on an equity share standpoint.
Sure. Tell me a little bit about the application slash approval process. Is it just like the movie Yes Man? Catch you on the right day after you take a pledge, say yes.
I wish it was like that. It'd be fun. It'd be a lot of fun. But no, the approval process is really honestly it's fairly quick. Now closing and approval are two different things. Closing can take a little bit longer than approval process. But a lot of times it's like I'm the way I describe it is I'm the first yes. And so as I come to me is like generally 2 years tax returns, interim financial statements, some personal information, what it is you're actually trying to do. Like the request. I know a lot of the people you probably listening to this that they're probably trying to buy a rental property or something like that. You improve investments. So really just be like, all right, cool. What are you going to get out of the property? What's your projections look like? I'll probably fine tune the projections and be like, are you going to manage it yourself? Okay, no. Well, then you absolutely have to add 10% management fee. It's like, which honestly, I encourage everyone, unless you are a professional manager, get a company to manage your properties for you. You're not going to make as much money at the end of the day, but you're going to save yourselves tons of headaches. But anyway, so anyways, I can make a decision in less than a week once I receive a whole package. And that's really the main thing is like once I receive a completed package is when you can actually make those real decisions of going, yeah, no, this is something I want to take up the chain of command. Like I said, two doors down is the chain of command here in Fredericksburg. I just walk down and say, hey, Wally, this is what I'm looking at. What do you think? And he goes, yeah, absolutely. Issue a term sheet, and then we start moving towards formal approval and then closing. And real estate properties, this appraisals can take up to 4 or 5 weeks, depending on what the type of property it is, where it's located, commercial versus residential type of thing. And then we close basically a week after the appraisal gets back.
Gotcha. Okay. What if I'm just leasing the space and I want you to help with my business? Maybe I'm a manufacturer making wickets and
Yeah.
I've got a proven history, but only a 1 year history. What can you do for me? I mean, what are you guys judging me on? Are you judging on a government contract I just secured? Are you judging on my history in that industry, or what are you looking at?
Yeah, so it's a little bit of all. Yeah, kind of like all the above. It's like, yeah, past performance, obviously. I was like, hey, what have you done so far with the capital you've already had before we extend you even more capital? But also depends on what the project's for. Like if you're a government contractor and you just won an award, and you're like, hey, let me buy a building now. One, I have to have the conversation with you. Is do you actually know what it means to win a contract? It's
Yeah.
like just because you won did you win a $5 million contract, or did you win a 5 year contract with a total of $5 million, and you have the ability to re-up once a year for 5 years for a total of $5 million. That's a completely different contract than hey, I've got $5 million coming in this year if I perform.
Yeah.
So again, it's having those conversations with it. But let's say you're not a government contractor, you're an actual manufacturer, you're manufacturing something, and you're currently leasing out a space, but you're like, hey, a property just came on the market for me to really move in there, save on some operating costs, rent's going to be, cheaper. If you've been in business for 1 year, we're probably going to be looking at some sort of partnership with the Small Business Administration, the SBA. They've got some great programs. They're not cheap programs by any means. Anything young companies are inherently risky, and risk always comes with increase in cost. Bank has to make their money back. Federal government has to make their money back because that's who the SBA is. So it'd be a little bit more expensive if you're a young company. But yeah, really just I'd run those numbers of going, all right, cool. I'm going to add all the rent that you're currently paying. I'm going to add that back to your income statement. You add any depreciation back, amortization, you typically called EBITDA, I'd find out what your actual EBITDA number is. And then I add on, the debt load onto it. And I try to come up with a good number that can actually make your business continue to thrive. One of the main things, and I like to talk about this, I'm actually more of like on the personal financial side, I'm a little bit more of like the Dave Ramsey type, where it's like, don't believe in like pretty much any personal debt. Like
Yeah.
you get no car payments, no nothing. Debt, say no to debt. However, I love leverage.
Score, folks. Don't forget that part.
Yes, exactly. I absolutely love leverage. And leverage is taking the assets you already have. One, it's always asset based. Leverage is always asset based. It's never liability based. Taking the assets you have, whether it's your receivables, your inventory, your property, and using that to leverage your business to the next level. And so that's where I'd be trying to find out those numbers. I'd be finding out your EBITDA and then finding out what appropriate level it is. So you actually are leveraging this new asset you're going to be acquiring, i.e. this property, let's say. And how are we going to leverage it so you can continue to grow your business? And I would have that each business is going to look different, but essentially what I'd be looking for is, does this new asset, for every dollar of debt that it is, does it allow you to produce $1.20, $1.25 worth of income? It's kind of the way approach I take.
Now, let's say for something smaller, some of our listeners may be working a 9 to 5 and they just, had a hope and a dream.
Mm-hmm.
We'll use restaurants as an example. They're inherently risky, high failure rate, blah, blah, blah. But if somebody wants to jump into the business from day one, what are we going to be looking at for credit score? What are we going to be looking at for, LTV, that kind of thing? Where would we be starting? And let's actually start this conversation with something smaller. Let's do a food truck.
Yeah.
We'll say 30,000 for the food truck, and then
That's a cheap food truck, by the way.
Facebook Marketplace, brother. Facebook
Yeah,
Marketplace.
yeah.
Let's say all in, I need $60,000. What would you expect from me to have up front?
So let's say I'd expect you to have a very, very well-defined business plan. And I'd want to know is like, so you mentioned Facebook Marketplace. This is the question I ask all the time. As a matter of fact, I'll plug one of my previous clients from another bank, Silver Branch Brewing up in Warrenton. That was actually their second location. And there was a brewery already in there called Warrenton, Warthog Brewing, I believe it was. And Warthog Brewing had failed.
Yeah.
So you had this brewery buying a brewery and saying, hey, we're going to be successful. So what's the first question? Well, what are you going to be doing differently? Like, what are you doing differently? What's going to set you apart? And they had a very well-defined plan, and they've been successful, with that plan so far. Like, so they've only been in business for just a year. Next month will actually be coming up on their year anniversary of second location for Warrenton. But that's the same question I'd be asking someone that's going to do a food truck. It's like, cool, awesome, love your business plan, but you're buying a used food truck, which generally means the previous food truck went out of business, right?
Yeah.
So why did that one go out of business? All right, they were a taco truck and you're going to be selling tacos. Why are your tacos going to be successful when theirs weren't? And there's a lot of times really good answers for that. It just has to have that conversation. Again, that's part of that art side. On the science side, we're going to be looking at going, all right, do you have enough capital? I was having this conversation just the other day. Not only do you have enough capital to get started, i.e. buy the truck. Let's say for sake of arguments, I could finance up to 100% of your startup capital. So that's $60,000, right? Do you actually have enough capital to buy your first round of inventory, pay your first group of employees, advertise, yada 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 yada, and next month pay the first loan payment. Do you have that? So a lot of times people want to start their business, but they have zero capital. And sometimes we can try to help with that. Other times the first conversation is hey, for the next 6 months, diligently save 10% of all your income, top line,
Yeah.
not after taxes, everything, diligently save and get enough capital so that not only can you launch your business, you actually launch your business successfully. I was having this conversation with a gentleman on Friday about a project he's looking to do, and I was telling him, "Hey, we've got this dollar figure that if you want to launch this business, this is the dollar figure that you need to bring to the table, to get off the business, to get the business off the ground, and for you to realize the dream." I said, because what will probably happen if you don't have this number is you're going to sink all this money into this project. The business is going to start running, and then 4 or 5 months in, you are going to have to sell it because there's going to be value in the property. So it's going to be a high acquisition. But he said, but you don't want to do that, do you? So you want to actually run this business because this business is your dream. Yeah, you'll be able to sell it and you're not going to lose any money, but you're going to have to sell your dream. So unless we can get to this dollar figure here where you're going to be able to get the business off the ground and be able to run it successfully.
Gotcha. And in the food industry, I mean, what would you expect? Let's say the month-to-month operating expenses is, I don't know, it doesn't matter the number. How many months would you want to see to be comfortable?
I'd want to see at least 6 months. Yeah, I'd want to see at least 6 months. I like to see, generally speaking, I like to see a year. Now, granted, that can be quite severe. That can be quite severe. I am people that will get to know me will know this. I'm a fairly conservative lender. I like to make sure that the bank isn't over leveraging themselves for your dream, and that you're actually coming to the table with your own assets at first. But yeah, it's I like to see a minimum 6 months of operating, capital. Because if you're a food truck, I mean, 6 months out of the year, you're basically not going to be doing a whole bunch of business anyway. For definitely for 3 months. And so, do you have enough cash? If you're going to open up your business in the beginning of January, well, you're not going to really hit the fair season and the food truck season until what, April maybe? Yeah, I know there's some events in March and February, but really April is when every weekend starts to open up. And so do you have enough capital to keep your business afloat for all those downtimes?
Sure. All right. As you can see, people, fluid response. It's not a black and white answer. I want to see
like to
6 months worth of operating costs. I'd prefer a year.
Yeah.
I don't necessarily need a down payment. So these are the kind of things. But it sounds like every person trying to jump into this should have a well-defined business plan, you said. So that's a starting point. Where do you suggest
Exactly.
people to get started? If I'm just average Joe working a 9 to 5, I don't have a business degree from Harvard. Where do you suggest I get started? On Google, library? What do you think of?
Those are good places to start. Realistically, the place I would start is who are the entrepreneurs you actually know in your life?
Hmm.
Start with them. Ask them what it's like to actually run a business.
Okay.
The sleepless nights. I mean, you're going to go from a 9 to 5 job, right, to really good mentor of mine. He was talking about corporate America, and he said, "Yeah, no, I only have to work. Yeah, I only work half days now." Well, what's half a day? Half a day is 12 hours, and that was him joking about being a manager of a Fortune 500 company, a manager. And so it's that's really the life you're going to trade in. You're going to trade in the 9 to 5 to now every Saturday and Sunday and every evening is going to be consumed by your new business. And maybe you're going to make a decent income from it. I know several food trucks up in Northern Virginia that make several six-figure incomes, but they also have no Saturdays and no Sundays anymore. And if they choose to take a Saturday or Sunday because it's just a one man operation, if he chooses to be off, he's off and makes no income that weekend, right?
Yeah.
And so it's really the decisions you have to make. That's one of the big things I see a lot of times is it's like, all right, who's going to be managing your business? Is it going to be you or are you going to hire someone? Okay, cool. How much are you going to pay this person to hire? Yeah, to manage it. And what's their experience? And why are they available? That's one of the other questions.
I saw my eyes darting to the sides
Yeah.
because I had to Google because I couldn't remember the title of the book, but there's the 3 day work week.
Yes. Yeah.
And
I love that book.
I,
I read
I
that
haven't
book
read it.
myself.
I haven't
Yeah.
read it, but I just it drives me nuts because there's heavy hitters in my industry. I'm talking loan originators that do 100 mil plus a year and production, and they brag about having every weekend off and going golfing and trips with the kids and quality time and all this crap. And they always glaze over how many people they have to hire underneath them to make that
Hmm.
happen. They make it seem like they're just like me. They have that one-on-one relationship with the client and blah blah blah. It's humanly impossible to
Yeah.
have that many referral sources and be good partners, good quality partners. And then the clients themselves, in order to do those gigantic numbers, do you ever talk to them? You know,
Exactly.
it's I don't know. I think it's impossible. And they all talk about their systems and stuff, but I think what it boils down to is having those personnel below you to kind of run the business. So I think you bring up a fair point. Before you um, break the bank, try to start some new venture, either on your own or with financing through a bank, you need to consider what it's going to cost you.
Yeah.
I tell people I'm self-employed. I'm not truly self-employed. I work for a retail lender. And even though I'm 100% commission, I'm still W-2. So I'm not, but if I took off the next 2 weeks, I'd take off the next 2 weeks.
Yeah.
I don't answer anybody, right? So I still have those. It's kind of like owning a franchise. It's the processors are in front of me, but I'm still my own boss. So I understand some of the struggles of starting a business. I came into it. It's funny you said 6 months because that's exactly what I saved before getting into this business,
Mm,
and I used every penny of it. And I was flat broke before I hit the 6 month mark, and I
absolutely.
finally it just I was lucky enough, blessed enough that it was simultaneous. Like I used up the rest of my savings, what I thought would last me 6 months, ended up being like 5.5. And then at the 6 month mark, I made it in the business.
Yeah.
Good.
And
But
that's where it is. Like that 6 month number. I mean, I know Dave Ramsey himself talks about having 6 months of your own expenses saved and all that sort of stuff. It's like these 6 month numbers don't. A lot of times they're not arbitrary
yeah,
because a lot of times it's like you're just talking about it, and you were in a commission based type of role, whereas like it's going to take you 6 months to get your office established.
oh,
Start getting some good, referral partners. Get the first person who chooses, hey, I'm going to go with movement instead of my bank or instead of this person or, yada, yada, all these things. Like there's a lot of factors that come into play. And it's roughly that 6 month part time frame is when people go, yeah, I like you enough to do that. I mean, I've been in this position at Link Bank for 6 months now. New market. I moved down to Fredericksburg last October. Started working this market in February. And so now we're basically right at that 6 month mark. And it's finally starting to come in the door. Some good referrals from people that are like, hey, I've known Eric for 6 months now. He seems like a decent person. Let me go ahead and start giving them some referrals.
can't
Good
hand
thing,
those bourbon, but
good
you
thing
certainly
I'm
can't give
salary
that
and I didn't have
bourbon.
to worry about expenses for 6 months. But
Yeah.
but the bank's worried. It was like, hey, is he actually going to be getting loans in over the next 6 months?
Well, cool, man. I appreciate your time. If you had one piece of advice before we wrap this up for somebody that has that dream of starting a business, what would it be?
Yeah, it really is. It is count the cost and time and money. Um, there's a proverb, and I don't have it off the top of my head. It's in the book of Proverbs from from the Bible, but it's like a diligent man will count the cost when he goes to build a tower, so that his neighbors won't laugh at him if he has to abandon it. And it's huge paraphrase. That's the ESV, Eric Standard Version
Yeah.
of the Bible. Um, but really, you count that cost. I've seen more great business ideas fail because the person with the idea didn't didn't anticipate it taking longer to get off the ground than it actually did. So that again, the 6 months to a year's worth of capital, whether from yourself or outside investors. That's the other thing. It doesn't all have to come from you. You
Yeah.
can check with mentors and find mentors, but really it's that count the cost and check with some really good advisors that will be honest with you. That will that really will be honest with you. That's the best people in the world.
All right. Last thing I got for you. For new and existing business owners that may be looking for financing in the future, why go with Eric? Why go with Link?
Because we have that regional style. So all the decisions here in Fredericksburg are made here in Fredericksburg. My thing is, I talk about this. Don't get me wrong, like we are reasonably priced. I do not compete on price. And I can beat anyone on price if I want to. But I know the value I actually bring to the table. I know what my management team brings to the table. I know that I can get any deal done faster than anyone else here in the market because I've worked in literally every single position in the bank. So I know where all the potholes are. I know how to jump through hoops before the hoops are even there. So I provide a very smooth process. I'll tell you right up front everything that I need. And so there's no dotting of I's and crossing of T's in the 11th hour.
Get that. Yeah. I think for the people still listening, what you said about the regional decision making is the big thing for me, anyways. That's
Mm-hmm.
what's attractive to me because I don't want some guy in Philadelphia or New York City, um, who doesn't even can't find Fredericksburg on the map, doesn't understand.
Google's
Uh,
Fredericksburg and comes up with Texas, and he's like, "Oh,
yeah,
that's out of our market." Yeah,
yeah.
no, Virginia, Virginia.
Our economy, our tourism, our everything is different than Alexandria or
Yep.
Philadelphia or anywhere else. So, to work with people that are here local and understand the market and can make business decisions based on this
Yep.
market, I think makes a big difference. But I appreciate your time, Eric. I will be sure to post your contact info below for anybody that's interested in hitting you up. And I'll see you at the next bourbon event, right?
All right, Chad. Thank you, man. I appreciate it.
Yeah, brother. Take care.
All right. Bye.